Well, Bitcoin clinging to the 100K level just days before President-elect Trump's inauguration, and a new wave of digital currency innovation could be on the way. Strive Asset Management filing for a new Bitcoin bond ETF, giving investors exposure to crypto through corporate debt rather than directly holding underlying tokens. The fund would primarily invest in bonds from companies like MicroStrategy, which now holds 450,000 Bitcoin. Strive CEO Matt Cole joined us here on set for more. Matt, great to have you with us.
Thanks for having me.
I assume that it's a pretty concentrated portfolio then, since there are only a handful of companies that actually do that.
Yeah. So to start, there's only a handful of companies. The TAM of these companies, of the actual convertible bonds, is about $10 billion. But interestingly, when you even look at those companies or companies that have not issued these convertible bonds yet, there's a lot of desire. So there's a lot of desire for more supply, if you just think about Econ 101. And then there's also a lot of demand, clearly, from retail investors that haven't been able to access these bonds. And so I think what you're going to see over the next year is just a shift up in supply and a shift up in demand as there's a democratization of access to these bonds.
How do you know that the convertibles that are issued by these companies are actually going to be deployed and buying Bitcoin? I mean, sometimes when they file, they don't necessarily, it'll say general corporate purposes.
Yeah. So our job is to say, do we reasonably expect them to buy Bitcoin? And so this kind of gets into the definition of how we define a Bitcoin bond. And so my background, I'm a fixed income background, worked at CalPERS for 16 years prior to joining Strive. And if you go back to the green bond era, a green bond was a bond issued by a corporation to invest in solar panels for their roof or something like that. And as long as we reasonably think that they're going to be deploying into Bitcoin, we define that as a Bitcoin bond.
Fascinating stuff. And when I think about risk reward, and again, from a credit perspective, aside from the fact that credit investors in a cap structure they're higher in the cap structure than equity investors. But when I think about a MicroStrategy, and I'm not suggesting they're on the eve of a credit event, but I would almost think that the risk reward here for buying a bond that's linked to a company who could have huge credit exposure because they're wildly levered to the price of Bitcoin isn't a great trade-off of risk reward for a bond that, to me, help us understand also for the investors what the return profile of these bonds is. Are we talking about correlation to Bitcoin returns?
Yeah, so to answer your first question, you have to figure out how do you break these bonds, right? Because there's always a way to break a bond. And right now with MicroStrategy, the value of the total aggregate debt versus their Bitcoin is about 25%. So you would need a decrease of, call it 75% in the price of MicroStrategy, but then they also have a laddered maturity schedule. So they don't have 100% of that debt due in any year. It's due over many years. And so if you're a Bitcoin bull, it's very hard to break these bonds. And we're talking about a major decline. And then not only a decline, but it has to basically flatline there for them to really have real solvency issues and not be able to do things like issue a little bit more equity to cover their actual first maturity. And so if you think about it that way, there's a lot of Bitcoin bear scenarios where these bonds are going to pay off at par. And so that creates a really interesting risk-return ratio where on the upside, they're designed to give about 75% of the upside of the exposure to MicroStrategy, at least in the issuance of MicroStrategy debt. And then in most reasonable bear scenarios, they'll pay back at par. And so that creates an interesting risk-return scenario from a Sharpe ratio perspective of, yes, it may not return the same as MicroStrategy, but you're getting a good chunk of the upside with limited downside unless everything goes really bad. And if everything goes really bad, then you're not going to do well, whether you're in the equity or Bitcoin or the debt.